Say you are buying a $30,000 car. Finance it for 60 months at 7.5% APR, and the total is $36,180. That is $6,180 in interest. Lease it, pay cash, or buy out the lease. And you get 3 completely different answers. Let us walk the math. Buy or lease is the classic question. But the monthlies sit between $420 and $603, close enough to feel interchangeable. So why do smart people land on opposite answers? Same $30,000 car, 4 ownership paths. A 60-month loan. A 36-month lease, rolled into another lease. A lease with a buyout at the end. And a straight cash purchase. 5-year totals first. The loan, $36,180, and you own the car. 2 back-to-back leases, about $25,200, and you own nothing. Lease plus buyout, about $33,120. Cash, $30,000 up front, plus about $8,300 in foregone returns. The baseline is the loan. $30,000, 60 months, 7.5% APR, that is $603 a month. Total paid, $36,180, with $6,180 of it as interest. At year 5 the car is yours, worth about $15,000. A lease is a structured rental, and 3 numbers run it. The capitalized cost, which you negotiate like a price. The residual value, the bank's estimate at lease end. And the money factor, the lease's interest rate. Money factor times 2,400, is roughly the APR. Worked example. $30,000 cap cost, $18,000 residual, 36 months, money factor 0.0025. Depreciation, $333 a month. Finance charge, $120 a month. Total, about $453 before taxes, which reveals the real variable in this game. Not the headline rate, the residual value, same $30,000 car. At a 60% residual, $18,000, you finance only $12,000, about $333 a month. At a 40% residual, $12,000, you finance $18,000, about $500 a month. The residual sets the payment. Here's the insight most buyers miss. The lease looks $183 a month cheaper, about $11,000 over 36 months. But whether your year 5 car is worth $13,000 or $17,000, swings the answer by $4,000 either way. Forecast the residual first, minimize the monthly second. This is why high residual brands dominate lease offers. Toyota Camry, Honda Civic, Lexus RX, often lease for $300 to $400 a month. Low residual cars on the same MSRP can run $700 plus. Now the loan side. 7.5% APR did not come from nowhere. It has been climbing for 5 years. Average 60-month new car APR. 4.0% in 2021, 6.5% in 2023, 7.4% in 2025, 7.5% in 2026. Used cars run 1 to 2 points higher. Credit score changes everything. Below a 660 FICO, subprime rates run 12 to 15%. A $30,000 car at 13% APR for 60 months totals $41,000. That is $11,000 in interest on a $30,000 car. Watch the 0% APR promotions too. They usually trade off the manufacturer rebate, typically $1,500 to $3,000 you would otherwise get. Always price the cashback option at your actual borrowing rate before taking the 0%. The highest leverage move costs 30 minutes. Walk in with a pre-approved loan from a bank or credit union. Credit unions like Navy Federal and PenFed often run 0.5 to 1.0 points below banks. Pre-approval typically saves $1,000 to $3,000 over 60 months. And resist term creep. 72 and 84-month loans are now almost 35% of new auto loans. An 84-month loan at 7.5% on $30,000 costs about $8,600 in interest, roughly 29% of the car's price. And you stay underwater for 4 to 5 years. So when does owning beat leasing? The answer is about one variable: how long you keep the car. 5-year horizon, side by side. 2 back-to-back leases, $25,200 paid, nothing owned. Loan, then sell at year 5, $36,180 paid, minus $15,000 from the sale. Net cost, $21,180. Owning wins by about $4,000. Hold longer and owning wins bigger, because depreciation slows after year 4. Keep the car through year 8, and the net cost lands near $30,180, about $3,773 a year. Toyota and Honda owners who keep cars 8 to 10 years often run below $3,500 a year all in. Lessees rarely beat $5,000. If you do lease, respect the mileage cap. Overage costs 20 cents to 25 cents a mile at lease end, A 5,000-mile overage is $1,000 to $1,250. Buying extra miles up front, at about 10 cents a mile, is roughly half the cost. Pre-purchase if you expect to exceed. Wear and tear is the other lease end surprise. Door dings, interior stains, curb rash, can run $500 to $2,500 in chargebacks. Read the wear standards in the agreement, because what counts as normal varies by manufacturer. Finally, the cash buyers. No interest, no payments. Is cash free? That $30,000 stops working for 5 years. In a 5% HYSA, it would have grown to $38,288. You forgo $8,288. At 7%, you forgo $12,076. At the 10% S&P 500 historical average, $18,316. So financing at a subsidized 4 to 5%, and investing at 7 to 10%, is mathematically superior. But only if you actually invest the difference. Federal Reserve surveys show most buyers do not. If the difference just gets spent, paying cash wins in practice. Cash has one more quiet dividend. Walking away from the add-ons, extended warranties, paint protection, gap insurance. Dealers earn heavily on these back-end products. And cash buyers face the least pressure to accept them. Zoom out for a second. The same car, financed in Korea and Japan, tells a very different story. The US baseline is 7.5% APR, with about 30% lease share. Korea runs 5.5%, lease share around 10%. Japan runs just 1.9%, government subsidized, with residual set credit at about 25% of new sales. On a $30,000 equivalent loan, Japan pays about $1,500 in interest, versus $6,180 in the US. And EVs are scrambling residuals everywhere. New EV models lack 5-year data, so lessors set conservative 35 to 45% residuals, making many EVs cheaper to buy than to lease. Open the interest tool, and enter $30,000, 60 months, 7.5%. You get the monthly, total interest, and the principal versus interest split by month. Stack a lease and a cash scenario in the compare panel, and the 4 structures sit, side by side. So here's the whole video in 3 lines. Trading in every 3 years? Lease. Keeping the car 8+ years? Finance or cash? And whatever you pick, the answer is set less by the headline rate, and more by residual value, usage, and your alternative return. That is the math behind the $30,000 car decision. Run your own numbers in the compare panel. See you in the next one.